think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. I'm still negative on Bitcoin, absolutely. I am negative on the S&P going into earnings. In fact, one more chart I want to show you guys. So a couple things. Number one, a recession in this situation could actually be much, much worse. The main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, notice where we've kind of just stalled here. And again, that corresponds with this area, which if you take a trend line kind of right under the consolidation lows here, and we just drag that across, you're kind of just on top of that level. So right now, this 26,800 level, that's your current support up to 26,800 to 27,000. But I do think that breaks. What you're starting to do here is form a bearish flag consolidation pattern. So bearish flag is sideways chop, which again is kind of eating up the bulls that are buying, but they're not getting a pop out of their buying because sellers are still making that selling price. So essentially what we're looking at is a break of this 26,800 sends us down to 25,000. And 25 will be a monster support. So again, that would be where you would start to potentially flip into a long position on Bitcoin. Now, again, us not breaking above 30,500 and confirming, to me, still tells me that we're still in a bear market. So you just want to be overall careful. But I do expect major support around 25,000. Well, at least for Bitcoin, it's that 30,500 level, right? So if you can get above that and confirm, that was the psychological level here that kind of denoted the 2021 lows, right? Where we had that big dip right down to 30,000-ish, give or take. So again, that would have been a key break point we can see right here. So on a technical basis, that's kind of what I'm looking at. And that's one of the reasons why I expected the market to push us back down on Bitcoin. Now, looking at like the CAC and various other indices, I think number one, you have the US markets that are more likely to be in a bear market that will continue to see selling. You have some issues there in Europe. They're still coming out of some things. But overall, the bottom line is let's keep in mind that the Federal Reserve has said that we're going to have a recession in the second half of the year. Yes, they said mild, but Rand, you remember transitory, right? So they said transitory, and look at what we got. They tell me mild recession. Right away, my mind jumping to probably at least a medium depth recession. And then you have other players like Warren Buffett coming out saying that year over year, one of his retailers' sales were down in the last month 22%. So the consumer is stopping their spending, and that's going to create a recession. So risk assets are wildly mispriced here. Yeah, so a couple things. Number one, a recession in this situation could actually be much, much worse. The main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, we're still talking 4, 5, 6% inflation. Now, if it gets down sub 3, maybe they have some wiggle room, but we're not at that point yet. So to me, that's a very scary thing. And stocks and crypto have to be very aware that the Fed may be somewhat handcuffed here if we do hit a recession. And then the big question is, if we get into a recession, how do we get out? Does the global markets, do they know how to get out of a recession without the Fed printing money? And if the Fed can't print money, do we get in this long-term recession that could be very rough on stocks as well as risk assets like Bitcoin? The bottom line is the 25,000 is just a major, major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about. And again, you can see on this chart, there is no doubt about it that, again, we could see that pullback here. But actually, if you just humor me, I want to show you one other chart here. It's the Bitcoin dominance chart. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. And again, if we look at this, you have a little shoulder here, right? And we have this move down here. Here's your head, and then down to the shoulder. And then we could be making a little bit of a shoulder. So if you break approximately this area right here on the Bitcoin dominance, you could actually see this coming down, Bitcoin's dominance coming down decently, possibly all the way back to this trend line. So what that would mean, it doesn't mean to me that the alts are going to rally. It just means that Bitcoin could actually play catch up to the downside to where the alts were or are. I think the market wants good earnings here. And the reason the market wants good earnings is that the market realizes with inflation where it is, the Fed only has limited abilities to lower rates. And so if you see earnings falling off a cliff, that's going to mean, we're heading towards a recession. The Fed cannot loosen that quickly. Remember, the Fed is priced to actually hike rates in about 9 days for their next meeting. So again, what are they going to all of a sudden do, a pivot and start dropping rates with inflation still at 5 or 6%? I just don't see it. So if you start to see really a crack in earnings, it could mean not just a mild recession, as the Fed has said, but actually a worse recession, which again, with the Fed's inability to print money and get us out of it because of inflation, that could be really, really bad. That's it. No, that's 100% right. Is if inflation can get back below or right around 2%, that gives the Fed the wiggle room to be able to lower rates and maybe print money in the future. Up here, they can't do it. I mean, just the bottom line is, we could see a bad situation with the economy. What are they going to do? Print money and then send inflation to 25%? I mean, we're going to be the next Venezuela. That's not going to happen. So you do not want a recession in the near term here with inflation this high. I'm still negative on Bitcoin, absolutely. I am negative on the S&P going into earnings. In fact, one more chart I want to show you guys, if I could pop up my screen here. So this is the monthly chart of the S&P 500, and I'll leave you guys with this thought here. Look at that insane run from COVID, the pullback, and the sideways consolidation. The next chart I'm going to put up here is called the psychology of the market chart, and you're going to see it almost is a perfect replica of what we have seen here, all right? Look at the run-up, the pullback, and the sideways consolidation. So this is fitting perfectly with the complacency period after euphoria and the pullback in the S&P 500. What we see on the chart here is the next phase coming is not a pretty phase for the markets. This is where we start to realize that a recession is coming. The Fed can't get us out of bed here. They can't save the day. And again, that's what I'm looking at. It's amazing how those two charts match up almost tick for tick. Well, yeah, and remember, as a trading competition, you got to be a swing trader there. So you're going to be basically looking to buy supports, but then shorting resistance. So if we do dip to 25,000, I'm going to be looking to buy, look for a bounce back to 26, 27, and then I'll look to short again once we get back up to the current levels that are consolidation, which are now becoming resistance once we break. So basically, you need to be a trader for the next, 6 to 12 months. Again, make sure it's within the comfort zone of whatever you end up doing. You want to be careful, obviously, but ultimately, you have to be a trader to make good money in this market, or again, be very careful and stay in cash.